Hey everyone, welcome back to the channel, your number one source for income-oriented investing. We're back with Sai Katara from Tap Alpha, the guys who manage the gaining popularity zero DTE S&P 500 cover call ETF T-SPY. How's it going, Sai? Thanks so much for coming
Doing,
back.
yeah, doing great. Thanks so much for having me. I think last time we chatted was beginning of April, and markets have been pretty wild since then. So really appreciate the opportunity to get back on and chat.
It's funny you should say that because we did our recording before April 9th.
Hmm.
And basically, we were talking about in that video how T-SPY is outperforming the S&P 500, it's outperforming VU and IVV. But then April 9th happened, which was a pretty big disaster for zero DTE covered call ETFs because the market went up like 10, 12% or something in that one day. I think the Nasdaq was 12, the S&P was 10. And of course, if you're writing a covered call for one day, you're giving up that upside. So I would love to start there because I'm actually very, very curious about it. April 9th, the market went up 9 to 10% or something, the S&P 500, and now T-SPY is actually a little bit behind the S&P 500, but I'm surprised to see that it's caught up already and it's actually doing pretty good. So tell me about April 9th, what happened to T-SPY, what happened that day? Just give me your overall. I'm just so curious about it.
Yeah, you know what they say, whatever doesn't kill you makes you stronger. We just went through it with April 9th. And the way I'm thinking about it now, and I think it'll be like cemented in our brains, is like D-Day for zero DTE funds
Man,
and
that's exactly
strategies.
how I saw it. Like literally, I made a video like it was a disaster for zero DTE. Sorry, go ahead.
Yeah, and it's literally like the worst case scenario for a zero DTE fund, which is actually like there's a silver lining to it. It's a blessing in disguise. The worst case before was just theory, right? This April 9th has only happened three times since World War II, and the last time it happened was 16 years ago. So some of the models and things are like, oh, it's a
Hmm.
tail event, it's probably not going to happen. This actually happened, and so it really helps strengthen and adds metal to the strategies that we have. So that day we ended up, the VIX was over 50. I had never seen that before since I've been trading options for a long time. And then because of that, we were actually able to set our strike 5.25% out of the money. We've never set
Ah,
that much headroom before. So we ended up, we captured about 60% of the upside that day, but we left about 3 to 3.8% on the table, which, for us it was not ideal because we want to obviously capture as much as we can. But what it helped us do was actually strengthen. We fortified several things in the strategy and how we actually execute. And that explains kind of how we've made the comeback in just over 2 months to be almost back to par again. And I can walk through those if that's helpful.
well, that explains a lot. And I had a feeling. I had a feeling because if I do some total return comparisons with your competition, with your S&P 500 zero DTE competition, like iSpy and XDTE, you're blowing them away right now. So before we get into, I want to know your plan and integration of if if this happens again. I'm definitely very curious about that. But before we do that, I just want to show the audience what I'm talking about here. So if we just do, for example, again, the T-SPY versus IVV, which is just the BlackRock S&P 500, index fund. You could see the T-SPY was doing, you could see the graph, right? You could
Yep.
see my screen. Okay, perfect. So this is from inception, of course, of last year in August 15th when T-SPY came out. And you see that right now, it's actually very, very close. It's actually catching up. But if you look at the graph, you see that T-SPY was generally outperforming the S&P 500. It was very, very impressive. But you're pretty much there. You're very, very close. And if we just do versus what I think is your main competition, which would be XDTE, real quick, you see that the XDT did not recover as quickly, and it makes sense. Your explanation, you went really out of the money that day, April 9th, which I think really saved you, and now you're easily outperforming XDT by a lot. You could see that on the screen here, and also a tougher competitor, I think, because it's ProShares, who's much bigger and has a smaller management fee as well. You're outperforming them as well. So first of all, I have to say congratulations. Obviously, TSPY is doing really, really, really well, not only against your zero DT competition, but also other more classic S&P 500 strategies as well, like SPY, for example. It's slightly outperforming SPY already, like despite April 9th. So go ahead, tell me your plan or the new T-SPY to try to mitigate a potential future April 9th, which might not ever happen again, or it could be 16 years. I actually personally thought it like never happened, but you confirmed it happened 16 years ago. What are we doing going forward with the strategy?
Yeah, it's this is such a great use case to walk through because we just went through it and it does impact how these funds are executed. So there are three big things that we did since then. The first was we ended up including new tools from the option perspective in our prospectus. So we added two defensive capabilities. We added the ability to do a long call to basically be the other half of a credit spread. That helps prevent catastrophic blowups like we had on April 9th. And then we also added the ability to add protective puts for catastrophic blowups to the downside. So I think of those things as catastrophic insurance. And then we have rules now for when we actually put them in place. The drawback is like they're expensive, right? We don't want to do credit spreads every day because that's going to give back too much of the premium. But it's just when we see the VIX elevated beyond a certain trigger level that we'll put one or the other in place. We've never used a protective call or a protective put yet, but we put in a few long calls, especially when the VIX was kind of elevated above 30, like it was in April for a while, which is a really good peace of mind in case things like took off again. So that was one piece that's really given us some powerful tools. And the coolest part was we had to do a prospectus update. So within 8 days of April 9th, we had the prospectus updated. And then, as you know, like we have an underlying fintech that we use that basically has our pricing engine and our strike selection engine that helps us run the whole strategy and it'll help us
Yeah.
run future ones. We got that updated within 2 days after that. And so basically, I think 10 trading days from April 9th, we put our very first credit spread on in order to protect against the high volatility environment. So that was one huge impactful upgrade that we made to the strategy and how we're actually executing it. The second thing that we did was we created faster, more precise trade execution. So our old setup, we got trades to the trade desk in about 15 to 20 seconds, which is fast. But zero DTE is really fast because you
Yeah.
see movements that happen quickly. So what we ended up doing, just so we could actually put in things like stop limits that'll execute quickly, we now built a direct fix connection, which without getting too wonky, it's the financial information exchange. So it's an integrated component directly tied to the underlying fintech's pricing and strike engine. So now we measure trade execution in milliseconds, not seconds anymore. So it's fast. And so what's the outcome for investors? It's really improved our limit order fills and helped us secure, it's hard to give an exact number, but probably 10 to 15% better premiums than we were able to get before with slower execution. That is a meaningful boost for the fund and sort of why you'll see since that date, like how we've been able to outperform more quickly and get back to par in a couple of months versus it's going to take others a lot longer.
Wow, that's amazing.
Um,
Yeah, you're definitely catching up quick. So, okay, the second one's pretty easy to understand. You're doing it, you're doing everything faster, which is always better, even if it's just a few
yep.
seconds in the options world. I just want to go back real quick to the first part, because I'm not a super options expert. My audience is more general investors. We know the so let me just dig deeper a little bit in the first thing you said. So you updated the prospectus, which is cool because normally if you update the strategy, you got to update the prospectus. I recall you saying two things. You now have the ability to do two extra things in the strategy. Put a
Yes.
protective put and a long call. When you say long protective put, I understand that one. When you say
Mhm.
long call, do you mean you have the ability to buy a long call on the S&P 500 in case it goes up really, really high? You're actually buying the call option, which means you could benefit from that. It isn't. I think that's kind of what Neos does. Correct me if I'm wrong. Spy Eye. They kind of write. They sell a call and then they buy a call more out of the money. Is it something like that?
I'm not familiar with how Neos actually executes that part of the strategy, but you're exactly right. So It's basically like a credit
A
spread is
spread.
something that people can Google, but basically we set our position like we always do. And then that's a short call, but then we buy one that's cheaper, that's a little further out of the money. So in case like
That
the market runs really fast, you
yeah.
don't lose on that super upside.
Is that a still a zero DTE spread?
Yes.
Okay,
Mhm.
okay. So that's exactly what I was thinking. Okay, so you have the ability to do that, and like you said, to do a protective put, to buy another, it costs money, and obviously
Cost money.
you're only gonna do that selectively when VIX is high, when you feel maybe there could be some big movements in the market. Do I have that right?
You nailed it. That's exactly right. And
Okay.
the big thing is, how do you know when to put it on? It is when VIX is up because things move so fast. If the market gaps up, you don't want to lose out on that. That's why you put it in place. Otherwise, tool number two, which is a fast execution, helps us with stop limits and things like that because we can trade it a lot faster. But it's just in those really extreme days where, like April 9th and kind of half the month of April, when things are just abnormal, you got to have a little extra insurance on the table to get through it.
Sounds good. Sounds good.
And then
I totally get it now, and it makes complete sense. And it seems like it's working. You're getting there really, really quickly. This is my opinion here. Obviously, I have no doubt you'll eventually beat the S&P 500 again going forward. It seems like you perfected the strategy. Is there a number three, or
yeah,
where
and yeah, number three, the bigger thing, which is bigger long term, I think impact. We built in sort of deeper market signal intelligence. So saying it simply, we do advanced analytics. So we did a lot of things before, where it was like volatility volumes, delta, gamma, market events. We even monitored news to see like when things would happen, so you kind of are ready to mitigate risk. But we added this whole more complete view of kind of the underlying market dynamics. So, like, where are the volumes within the strike? To put it another way, think of it as like a fish finder for market depth. So now you can actually see what's going on one layer under the surface. That gives us a much more complete view, which is really helpful in strike selection strategy, but also as the market shifts through the day, you can kind of see things that we couldn't see before now that we have this new view. And that has been really helpful to sort of deliver the impacts that we've been able to deliver since D-Day on April 9th. So if you
awesome?
kind of take all these enhancements taken together, we've been able to get back essentially we're almost even. But I'll share my screen real fast.
Yeah.
So the comparison is we've even been able to outperform the underlying over the last 2 months. So this is T-SPY from April 11th to today. And you can see the pace, we're at about 13.67 over 2 months, which is a crazy bull rally by any measure. And the S&P 500 is up about 11 and a quarter. So we're up about, 2.5% in 2 months, which is what's kind of got us back to almost even with the underlying.
That's incredible because I was showing the total returns from inception. This is a little bit later. This is a little bit shorter time frame, but the time frame is when the market has been in a rally up significantly 11% in 2 months is pretty high. And cover call strategies will tend to very much underperform all the time, but it looks like you're outperforming. So it looks like those three factors, those three strategy updates seem to be working really well. So that's very impressive.
It's been it's one of those things like where it's also kind of a philosophy thing where we're always just trying to iterate and improve and we'll never stop doing it. And I think the best part about it is this is all built into the underlying technology, which is scalable to any ticker. And so it'll also apply to future tickers too. But it's one of those things. I would also put zero DTE as a financial tool in the same bucket of innovation because it's, in an uptrending market, the biggest knock that covered call strategies have, a traditional strategy, is that, oh, people say, well, they can never keep up with the underlying. Zero DTE actually has a shot, and you can see it in the numbers here, where because you're doing this every day, it really helps to
Yeah,
give a good probability that you could potentially keep up with or outperform the underlying security.
I agree with that. I've been following the zero DTE strategies, and even your competitors were some of them were outperforming the S&P 500. But as soon as April 9th happened, that reversed. So it's cool to see that you guys are learning from it, evolving, and putting different tools in place. I'm not sure the other ones are, but I agree with you that, normally you would think it's impossible for a regular cover call strategy to beat the underlying over time if it's done on a good asset like the S&P 500. We all know why. We all know why, because, you're giving up upside with the cover call strategy, but pretty cool that you could actually do it. It's possible with zero DT and without any leverage as well. So yeah, super impressive. So how come the TSPY is doing really, really well? How come it only has, why do you think it's not as popular? It has 35 million in assets. It is growing a little bit. It has a very regular, consistent distribution of, of about 14% monthly
Mhm.
income. And I'll just share my screen real quick. I'm just going to show the audience here the home page. You have 35 million in assets. The management fee, the expense ratio is actually somewhat less than most of your zero DT competition. Distribution rate is really nice. Consistent, very consistent monthly income, which is rare because the other ones, some of them have weekly, some of them have monthly, but they're like all over the place. Sometimes it's very high, sometimes it's lower. So you guys have been able to achieve fairly consistent distributions. So why do you think TSPY doesn't have more assets? What are your thoughts on that?
Yeah, I think it's relative. So we're a first-time issuer. It's our first ETF in the market and our first product out on the market. And so I think people, one, they don't know about us yet, and two, they want to see the track record. So we do a lot of conversations, for example, with advisors. And, it hasn't even been a year yet. It's been about 10 months. And if you look at, it's two sides to it, right? The strategies are popular. There's definitely market demand for it. But to have a first time issuer first product at 35, 36 million in 10 months is actually kind of an outlier. Not as many new issuers actually can get to this level. So I think part of the reason we got up here was because of the demand for the strategy. And I think just more people need to know about it, see how it performs through these different market conditions. And now that we've been through sort of, some would call it the worst case scenario, and we're actually doing quite well coming out of it. I think that's going to help give people confidence, especially on the advisor and institutional side, to say, okay, now I see how it's going to behave in these different market conditions, and here's what I can accomplish with it. So that I think is a big piece. And hopefully things will get up now that we have a little bit more track record behind us and you can see the improvements and how it's impacting it to get to a pretty good AUM. But it takes time. We'll be patient, but there's going to be a day I think where T-SPY is going to be there.
Awesome. Yeah, that makes sense. Hopefully this video helps out. This appearance helps out. And we discussed it last time. I'm not going to ask you again about it, but future launches like a Nasdaq one, which they're also, zero DT Nasdaq 100 are also very popular as well for good reason. Could probably even achieve a little bit more yield, a little bit more premium. Is the plan still the same? And no news on that, or you're waiting for T-SPY to achieve at least 50 million first? Is that still the plan?
Yes, that's exactly right. I think our plan is still to launch TDAC as soon as T-SPY hits 50, but right now we're sort of on a great trajectory. The other thing too, April kind of provides some jitteriness in the market, and so people kind of froze for a month and a half or so. And now that we're coming out of it, we're starting to see more consistent asset growth. So I'm happy about that. I think we're going to get to a spot where TDAC can be launched relatively soon. But yeah, we're about 15 million away, so hopefully not too much longer. We'll get TDEC on the market. And the other thing I'll say too, everything that we've discussed that we've learned and improved on in T-SPY is going to automatically be applied
Go
to
to the
TDAC to
Nasdaq
be
one.
to do so.
I'm excited for you, man. I mean, I really like this ET. I think it has a lot of good things going for it. One, the potential to outperform the S&P and other cover call strategies. Two, I really like the very consistent distribution. Some people, yes, they like weekly more than monthly, but some people really like a very consistent distribution. This is one of the only zero DTE ones that does that. Not the only one, but one of the only ones. Very good performance, good MER as well, adaptation, and you're evolving the strategy. This is always something I like to hear when this is like kind of a niche options ETF. So yeah, I mean, congratulations on the success. I think it's a really cool ETF. Definitely one to consider as a core position, in my opinion. for an income investor, because essentially you are investing in the S&P 500, right? If we take out all the bells and whistles, what are you investing in? The S&P 500, and the proof is in the pudding. Just compare it to VO, IVV, and you'll see the graphs pretty much match. So thanks so much for doing this. I don't have any further questions. You've answered anything. If there's anything else you wish to add, go ahead, but I'm good on my side.
Yeah, I just want to say thank you. I think part of it is it ties back to the why we do what we do, and providing powerful, strategies and making them simple and accessible to everyday investors is a really important core piece. And that access is really important. And I think what you do on your channel in educating and giving people information gives them access to things that can potentially help their lives. And so with that, I'm
Appreciate it.
really just appreciative of kind of the work you do, and super excited for all the things that are ahead.
Yeah, same. Looking forward to that Nasdaq one. So, Sai, thanks so much for doing this. Hopefully, I know this won't be the last time. We'll have you back anytime to discuss these cool ETFs. So take care, my friend. See you soon.
Thanks so much.